Moving into sort of private market valuations, they're at all-time highs with equities. We currently, not just in the US, but worldwide, we have an influx of unicorns. Um, when this economic downturn comes, it will be quite massive, I think, for some of these private companies, especially given their inflated valuations, and some of their funding rounds. And obviously, I'm sure you're aware, some of the logistics behind angel investing, venture and whatnot. So I'm thinking that we'll see quite a bit of pain in some of these companies, and a lot of them going down under. We see some of these private companies spending quite a bit, given that there's such a large flow of money in these companies. What are your general thoughts on that if you're following the private markets at all?
Yeah, interesting. I have said often that people forget, and I'm not so much the venture stuff, but in the a lot of the private equity is what we used to term back in the 80s, leveraged buyouts, right? So we changed the term. It was much, leveraged by the history in the 1980s when Mike Milken was around, and leveraged buyouts had a great run, and then they started running into the big problems. We kind of changed the name to private equity. It sounded much more friendly than leveraged buyouts because leveraged buyout had a bad connotation for a while there. So people don't realize when you say private equity, it sounds fine. And frankly, a lot of endowments and a lot of pension funds, particularly public pension funds, have gone to private equity. It solves a puzzle for them because it doesn't give you the volatility that you get in the stock market. And so they've loaded up on private equity as a way to say, hey, we can generate extra returns there, but not with the risks, the volatility that we see in the public markets. I think they're not understanding that there are risks there that are every bit as big as a stock market. And as a result, they're kind of looking at private equity as more stable and less risk, so that they feel their portfolios are maybe, they've reduced the risk of their portfolio, and they're generating theoretical returns anyway that look good. I think you're absolutely spot on in terms of this. I talked about leveraged buyout for a reason. I keep saying the big story behind this bust is the massive leverage. Part of that leverage is private equity, and when that reverses, leverage is a very dirty name when you're going through a bust. I mean, it just, you don't have anywhere to turn because you've got to meet your debt service obligations. It's, if you don't have debt, you can survive. If you have a lot of debt, you may not survive. So that's on the leverage equity or private equity area and leverage buyout area. Venture capital is not my field. I don't know. You probably know better than I do, but it stands to reason. If we go through a real tough time in the global economy, there's lots of that is higher risk as well, so it will suffer. I don't think we're going to have too many prisoners, taken in this bust. The areas that I always point to as the places where I think we could see positive returns in a very negative return environment are two: U.S. Treasuries and U.S. dollar, because people run to the dollar as a flight to safety trade. Not from here, because I expect the big, drop in the dollar first, but at some point in the bust, I think the dollar will be protective, and so will Treasuries, because I'm not, as long as they have the printing press, U.S. Treasuries are not at risk. They will be at risk by the end of this decade, but this cycle, I think they will be a place to hide. So those are the two places. Other than that, I think pretty much every asset is going to be under duress.